Hello and welcome to Smartkarma's corporate webinar. I'm Sanam Nanwani from Smartkarma. This week we are hosting Siloam International Hospitals and we are glad to have with us the CFO Daniel Phua. We will start the webinar with Daniel walking us through a company presentation, after which he will engage in a fireside chat with Smartkarma Insight provider Angus Mackintosh. We are taking live Q&A, so I would like to request our attendees to post your questions in the Q&A tab at the bottom of your screen. During the webinar, I will also share some links on how you can connect with Siloam Hospital and read more research by Angus. So please do keep a lookout for messages in the chat box. I now hand it over to Daniel to walk us through a short company presentation. Daniel, please.
Okay, thank you, Sanam, for the introductions. I will take you through a short overview of Siloam Hospitals. For those of you who are not familiar with our network. First of all, in terms of the investment case for Siloam, we are the largest private hospital network in Indonesia. And we are spread across 30 cities throughout the entire archipelago. We have the widest reach of any private hospitals within Indonesia, with 41 hospitals across the entire archipelago. We've always been acknowledged as a leader in the key medical specialties areas. If you look at our average revenue per bed, we are the highest compared to all our peers because we have generally more complex and more advanced surgeries and services being performed. And if you can see our performances year on year, the CAGR has been solid in terms of improvement in both top line and bottom line. This is helped by a significant turnaround in our ramping up hospitals, which were previously loss-making, but are now gradually all turning profitable. And we also believe in the investment in ESG, and it is a big focus of management in ensuring that we focus on a sustainable growth strategy and making sure that there is qualified management to run our corporate affairs and the governance and so forth. As mentioned, 41 hospitals across 30 cities, and this is a map of where our hospitals are. As you can see, although we obviously have an outsized representations in the area of Java Island, but we also have hospitals, as you see, from the east to the west end of Indonesia. Close to 4,000 beds, 3.5 GPs, 8,000 nurses, and in addition, the hospitals is complemented by about 60 clinics operated by Siloam throughout Indonesia as well. We are, again, coming back, as I mentioned, we are acknowledged leaders in terms of the specialty areas. The average revenue per bed, as you can see from Siloam, is significantly higher than our peers. And the main reason for that is that we generally perform a more complex and more specialized services compared to our peers. And we believe in making sure that each hospitals focus on a key specialty area instead of being just a general hospitals. So that strategy has continued to drive and improve and maintain our average revenue per bed over the past in comparison to our peers. With regard to financials, you will notice that the majority of contributions is coming from what we call PPE, which is basically in the private segments. BBGS, contribute about 15% of the revenue, and MOH is basically the Ministry of Health, which contributes the COVID revenue. As you can see, in 1Q of 22, the contributions from COVID has fell from about 18% in 1Q 21 down to only about 3%. So the majority of the revenues has been contributed by non-COVID related revenue. As you can see, there is a strong growth in here as well in both the private market and also the BBGS market in terms of the supply mix. With regard to the 1Q22 financials, as you can see, it's relatively flat compared to the previous quarter, both from a revenue and EBITDA perspective. This is despite the fact that there was a strong spike in Omicron. Omicron, unfortunately, is a double negative for our hospitals because it reduces mobility such that the non-COVID revenue goes down. In normal COVID time, so to speak, when the non-COVID revenue goes down, it's supplemented by COVID revenue. But in the Q1 of 2022, Omicron resulted in very low hospitalizations, which is very good, for our patients. Financial-wise, despite of that, we were still able to hold steady with regard to the performances compared to Q4 of 2021. So as you can see, I highlighted previously, close to no COVID revenue. Yeah, there is, in normal circumstance, base case would be severely impacted as well due to the restriction on mobility, but we were still able to maintain performances in Q1 compared to Q2. And I think more telling is that if you were to compare our performances to pre-pandemic level, which is first Q20 before the COVID pandemic hit, our revenue actually went up by 21% and EBITDA was higher by 35%. 2021 performances was obviously significantly aided by COVID. As you saw earlier, COVID made up 18% of our revenue. So despite the COVID revenue falling away, the fact that we are still able to maintain the base case or non-COVID revenue basically points to the success in the strategy the management has been implementing in ensuring that the base case revenue continue to grow in spite of COVID. A few updates. Siloam also opened its 41st hospital. This is Siloam Agora, is in the prime locations in the city center. And basically, what's unique about these hospitals is that it is the first managed services hospital that we have operated. Yeah. So basically, you will be familiar with the managed services model in the hotel businesses. Basically, the likes of Hilton, the Marriott would both basically lend their brands and network, but the capital would be contributed by other investors. So this is very similar. We do not contribute any of the capital to the hospitals. There are external investors that does that, but the Siloam contributes its know-how, its systems, and basically integrate this hospital with our network such that the referrals can also be integrated, and it then complements our network of services. So we believe that this is an asset-light model to allow us to expand in the future, and Siloam Agora is the first test case. We do want to make this pilot a success, and we believe that there could be many more to come. And other areas of focus that we haven't stopped doing even during the pandemic era is really continue to invest in our center of excellence. Right? We want to make sure that each hospital has its own key focus area. Going from oncology to neurology to cardiology, fertility, kidney transplants, we really want to be ahead of the curve. We want to have the most advanced services. We want to make sure that Indonesians patients do have access to advanced care that they could get anywhere else in the world. So we constantly scout out in terms of what is still missing and what is still absent. For example, we recently signed a big PO for the linear accelerators for oncology treatments. And this is one area whereby the number of equipments per populations is very low compared to anywhere else in the world. And digital is also a key part of our focus. Our My Siloam app continue to improve in its capabilities. You're able to book appointments. We are able to do online consultations. You are able to basically track the progress of your appointments, and we are continuing adding features and functionalities to our My Siloam app, along with the Idol app that we are also partnered with. So telemedicine is an area that we'll continue to develop along with the home care services, which we have started, and we have seen a very positive uptake in terms of our home care services as well. Some positive tailwind on our side is definitely the recovery of the Siloam Bali hospitals. Siloam Bali there are 3 hospitals in Bali, and these used to contribute about 200 B in EBITDA every single year. Obviously, when the COVID hits, these hospitals were severely impacted due to the reduction of tourists coming in. The margin for these hospitals are significantly higher from our normal hospitals. These are about 30-35% EBITDA margin compared to about 20-25% margin for even our flagship hospitals in Jakarta. So the gradual reopening up of Bali will definitely have a positive spin on our hospitals' performances going forward. So if I can briefly outline some of the key thinking with regard to the strategy for Siloam, we basically separate it into 4 key areas of core growth, network expansion, clinical programs, and digital health. let's cover each of these in a little bit more details. With regard to core growth, we want to look at how we can grow our base revenue. Yeah, basically, how do we optimize the base case revenue that we are currently getting? So this includes various initiatives, including how to introduce more procedure packaging, such that we integrate a few services into a package whereby the prices is fixed. It gives more assurance and more certainty to our patients. We looked at how do we improve the utilization of equipments, including the capacities, how to improve the effectiveness of our sales team, investing in tools like, for example, Salesforce, having more robust procedures and the KPIs for our sales teams. BBGS is also very important in terms of how to optimize the services from a BBGS, from a case mix perspective, and along with looking at our pricing and making sure that we are providing a value-based pricing for our patients. On the cost side, we continue to have initiatives to reduce our material costs. This year, we set ourselves a target of 100B reductions in terms of overall material costs compared to previous years. OPEX, including optimizations of energy efficiency, aircon, and contract services for cleaning, security, is an ongoing area whereby we are identifying areas to be able to make improvement. We're also looking at how to better plan out inventory in terms of reducing DOI and how to better optimize some CapEx going forward. So these are some of the highlights with regard to Siloam. I'll probably pass the times over back to Angus, for any further questions and follow up from that.
Very good, Daniel. Well, thanks very much for the very concise presentation and some interesting sort of forward-looking strategies as well. Might just take a step back just to kick off the questioning and just sort of put it out of the way, if you like. So COVID, it seems, is moving from kind of pandemic to endemic. But I just wondered, what are the company's plans regarding COVID-19 readiness? And are you still keeping some of your COVID dedicated hospitals, at the ready, if you like? So in a sense, are those hospitals sitting empty, waiting for something to happen, or are they going back to kind of normal activity?
That's a good question, Angus. COVID-19 is over, and it is not over. Yeah, I think there's a way that we need to look at it. And there's definitely still a risk for a flare-up. I think we do not discount the possibilities. But the way we have asked our hospital to operate is to basically run our operations assuming that COVID will stay low. Yeah, COVID is something that if it happens, it will happen. We've been through it already. We know how to adapt to it. And our beds, we now no longer have dedicated COVID hospitals. In the past, in Jakarta, we have 2 dedicated COVID hospitals whereby it only accepts COVID patients and nothing else. So these hospitals are now gradually opening up to accept non-COVID hospitals as well, non-COVID patients as well. Obviously, it's not going to be difficult for us to switch that mode back and say, look, if COVID was to flare up again and revert this back to dedicated COVID hospitals. I think that strategy of having previously dedicated hospitals do give us that flexibility. So the non-COVID hospitals will still operate in a way that they have operated in the past anyway. So that gives us the ultimate flexibility, Angus, in terms of really an uncertain futures going forward. We also did not want our hospitals directors to, if you like, get addicted to COVID. Yeah, we say it's a little bit like cocaine, so to speak. It could come too easily. Yeah, when it's a high COVID time, COVID will dominate all the traffic and all the revenue. And we are always afraid that the hospital directors then stop thinking about how to grow their base case and how to grow their non-COVID business. So the risk for that is significant because when COVID goes away, if we are not ready to adapt to a non-COVID scenarios, that could be very dangerous, which is why we've always adopted the strategy of what we call the clean hospital strategy. In the Jakarta areas, except for 2 dedicated COVID hospitals, the other hospitals do not accept COVID patients. The primary objective for that is to safeguard the safety of our patients and our staff and our doctors, obviously. But the secondary objective for that is, so that our non-COVID hospital constantly have to think about how to supplement their revenue. I mean, how do they get, so obviously during COVID, people are more afraid to venture out. The non-COVID revenue will drop, but they have to work harder to basically get out their performances. But I believe having that discipline allow us to run quicker in the post-COVID era. Yeah, allow us to recover, allows us to have more comprehensive list of services because we haven't been relying upon COVID as a key source of revenue.
Very good. Well, no, that's in fact that leads me onto the next question, which is really base case revenues. I mean, the base case revenues basically, I think in December and January hit record levels. I'm not sure if you can talk about any later months, but you know, what have been the sort of main sort of drivers in terms of, you know, patient type or types of treatment that have really led to that big pickup in base case revenues? I mean, I would guess that, you know, a number of patients have, there's quite a lot of kind of pent up demand, in that people may have delayed procedures for non-urgent and are now having them done. So, you know, there's a bit of that obviously happening. But if you give us a bit more color on that, that'd be fantastic. Thank you.
But Angus, as you mentioned, I mean, obviously a key areas is a lot of pent-up demand, a lot of elective surgeries that has been deferred previously and coming back. Keep in mind, though, that even at this moment, the overall throughput is still about 20-25% lower than the pre-pandemic era. So look, a lot of this, again, is services coming back, yeah, but we are still not back to the level it was pre-pandemic, which means that there's still significant avenue for growth. And I think the other part that is really supplementing our overall base case revenue is that a lot of people that used to travel overseas have now decided to try the healthcare services in Indonesia. And as part of that, they've now started to realize, you know what, you know, their perception is perhaps not correct, that the quality of care in Indonesia is in many cases comparable to what they can get from Singapore, Malaysia, and Thailand. And I think these have changed people's perceptions with regard to the Indonesian hospitals. And we are, you know, seeing a robust growth in our MRCCC and oncology services. And we are seeing a lot of patients who would used to go overseas are now basically, you know, are becoming new customers of ours. I mean, including expat that in the past would never think of getting treatment in Indonesia are now acceptance of that fact. So I certainly believe that that has grown revenue for us as well. At the same time, obviously, we are also actively growing our digital and home care businesses. These are also new revenue sources for us as well. And I think the pattern of how patients access healthcare services has certainly changed. I mean, compared to previously, whereby they can, you know, access our services through a digital channel, through a home care channel, and that we follow up services in the hospital if need be.
Great, very, very interesting. That kind of leads me slightly onto the you know, the next sort of subject I want to touch on, which is your unified sort of pricing strategy, which you know, it seems to me has been one of the main reasons that you've managed to sort of push the profitability levels up, you know, significantly. And you know, as you talked about, you know, earlier on, you know, that the ramping up hospitals have moved from a loss-making position into now making money. So if you could possibly sort of talk a little bit more about that would be great. The pricing strategy.
Yeah, sure. Look, the pricing strategy, we call it value-based pricing strategy. Effectively, what the commercial team has done actively is reassess and look at our prices compared to our peers. In some cases, I think we are charging much lower than our peers, and in some cases we are higher. So the idea of the value-based pricing is to really bring it in line with the value that it is providing the patients. We are also basically, you know, introducing more packages so that they are fixed pricing for our patients. I mean, improve more certainties. So the value-based pricing initiative, to me, I guess, whilst it does help revenue, I mean, it is not the main driver. We wanted to make sure that we properly assess each of our procedures and services and making sure that we are billing correctly. And I think as part of that, we also have initiative to look at shrinkages, whereby in the past we noticed that we have been underbilling certain consumption of items and so forth, you know, whilst it's been used but has not been billed through. So we have had projects to go through and identify those leakages and making sure that we are properly billing for all our services as well. So I think that part of it has certainly improved patients' experience as a whole.
Right. Yeah. Well, that actually, yeah. follow on from that, I was just thinking about your sort of procedure packaging strategies, and they've obviously been helped to improve returns. Can you explain a little bit more detail as to what those packages might look like? And obviously it's kind of you mentioned value-based pricing. Is that one and the same as procedure-based packaging, or is it different?
Well, the values-based pricing is more when we look at the different pricing, for different services and drugs and so forth. Yeah, so this is across the board. A procedure packaging is basically what we're trying to do is, for example, we introduce a maternity package. Yeah. Whereby it will be an end-to-end package that would covers consultations. It would covers room and board. It would cover basically, if it's cesarean services, and all that is basically packaged in as one package. Yeah. So you pay one package price upfront, and you would know all the services that is included in there, as opposed to, say, for example, you pay a fee each time you do a consultations, and then if you were to book in, for cesarean services, then you book another services, and that's what we mean by package pricing, right? As much as possible, we look at logical services instead of the patients having to look at those one by one. We try to bundle them, and we have a fixed price for it, such that there's also an understanding, because one of the biggest complaints sometimes from patients is the uncertainty with regard to what the pricings are, by the end of all the treatment and procedures that they have to go through.
Right. Well, I've had direct experience myself, having had a child at a Siloam hospital, so I was a satisfied customer. Let me say it.
That is good. That is very happy to hear.
Yeah. So you talked a little bit about sort of specialist areas of treatment, and you mentioned oncology as one, and the fact that it's enabled you to attract people who might have previously traveled to, say, Singapore or Thailand or Malaysia. What would be the sort of main? Oncology is one area, I guess, which would attract people, because obviously people are sick. They don't necessarily want to travel if they're being treated for cancer. But which other areas are seeing strong take up, and maybe you could also explain. I've heard sort of medical tourism mentioned, and when we think of medical tourism, you think of foreigners flying in and having treatments done and then flying home again, because they're getting very good high standard of treatment for a much lower cost than they would at home. Is that also something that would fit into your strategy?
No, definitely. I think the government has been talking about promoting more medical tourism, especially with Bali as a focus area. There's the development of Siloam International Hospitals in Bali as well. So I do think Bali would increasingly become a focal center for the development of medical tourism for Indonesia. I think we're uniquely positioned to take advantage of that. We have 3 hospitals in Bali. Yeah, so we are already there. And there has been various discussions about what are the specialties areas that we want to implement in there. For example, IVF and plastic surgeries. Those are some of the areas being discussed. So those are certainly in our plan in regard to how to capitalize on that. In the same token, I guess when we talk about medical tourism, there's obviously the out tourism and the in tourism. Yeah, so we need to, I guess, capture more of the out tourism to keep them in here and capture more of the incoming tourism. So Bali is a center whereby we can capture the incoming tourisms. For the outgoing, I think it's not just oncology. I use oncology as an example. I do believe that it is across the board. Whereby be it cardiology, be it neuro, be it other services. I raise oncology because it's always the top of mind. Yeah. Every time people is diagnosed with cancer, you always want to get the best, right? And you will say, look, if I have the money, I just want to get the best. Where is the best treatment that I can get? And I think increasingly, we are getting a lot of positive feedback from the patients in terms of the quality of services that we provide. I think this is not just onco, cardiologies and other services as well. And it also allows us to get feedback from patients who used to go to Singapore. What is it that they get that we don't? So we also want to complement our range of services. So we have another initiative, what we call the Golden Field, which is saying that, look, let's actively go through each of the hospitals in terms of the specialty area and see how complete are we with regard to the end-to-end range of services that can be accessed overseas. What else is missing? What do we need to add? Yeah. So the idea is that, look, anything that the patients can get in Singapore, they should be able to get in Indonesia in our hospitals as well. And this is increasingly becoming one of our focus areas.
Right. No, very interesting. Certain hospitals will basically take up certain specializations, and that would drive higher revenues in those particular hospitals. Is that what you were saying? Is it? So
the way we see it is that Siloam always has a strategy in that we don't want to be a general hospital. Yeah. A general hospitals is basically, your pediatric, your internal medicines, and so forth. Being a general hospitals is good in that you get a lot of volume. Yeah. I mean, obviously, if it's internal medicine, pediatric is like, there's plenty of people that will need their services. Once you pick your specialty area, obviously what changes is that your catchment area increase. Mm-hmm. Yeah. So people are willing to travel further. Let's say if they know a good urologist, they're willing to travel further. Whereas if you just want to go find a pediatrician, you just go, I'm just going to find whichever is the closest. Yeah. So I think Siloam's strategy is always to make sure that each of our hospitals try to develop and focus on or multiple specialty area. Yeah, obviously as the hospital get bigger, it would have more specialty area. It improves the catchment, and obviously with more complex procedures, the revenue the charge for those will be high as well, which is, as I alluded to, our average revenue per bed is significantly higher compared to our peers because of those strategies that we have been implementing to focus on more complex procedures.
Right, got you. Very interesting. I just to go back to Bali for a second, because you've talked about that earlier on, and obviously it's just come into the conversation. But I just want to, what portion of the patients in Bali before COVID were foreign, and what portion were local? I mean, I guess it would also be Indonesians visiting Bali from elsewhere in Indonesia. But how would you sort of look at that patient mix? And obviously it's probably too early to say how much it swung back, but what are we looking at in terms of the split normally?
We have 3 hospitals, and the split is slightly different. Certainly our Nusa Dua and Kuta hospitals would have majority foreigners. I would say close to 70% pre-pandemic. And I guess after pandemic it's not very meaningful because the volume becomes very, very low. And those hospitals is primarily geared and catered towards the tourists. Mm-hmm. So we are seeing the volume coming back. I mean, especially in the last few weeks. I mean, as Bali opens up, as foreign tourists start to come back, it's not quite back to pre-pandemic level yet, but it's certainly getting there.
Right, and would that be a mixture? I guess it would be a mixture of long-term residents, expats, and tourists.
Yes, yes.
Or would it be a big portion of kind of local residents, if you like, foreign local residents who have retired here or sort of doing some form of job?
Certainly, we don't break them down between those categories. We only look at passport, non-passport, I mean KTP or non-KTP. So on that basis, certainly non-KTP does make up a substantially higher proportions. Yes, to be honest, I would say, well, there are foreigners, expat there in Israel, I would say basically tourists will still outnumber those. If you look at how much volume has dropped when Bali closed, yeah. If we just rely on the expats staying there, it's really very difficult to sustain our business.
Yeah, and what kind of what kind of occupancy rates would you need in Bali hospitals to bring them back up to the same levels of profitability? And what's your kind of view on when that might happen? Is it something for 2023, or is it something sooner than that?
If you were to ask me, I honestly think that could happen this year, Angus. Assuming the trajectory we are seeing is continuing, even as of now, throughput-wise, revenue-wise, they are not far off. I would say probably about, let's say, 20-30% off from where it needs to be. But we are definitely seeing month-on-month increases. Like last month, we still see that it's mainly domestic tourists. But this month, we're already seeing that a lot of foreign tourists already start coming in. So yeah, I don't even think it would take that long. I certainly believe that within this year, we will get back to pre-pandemic level. Again, low touch wood, assuming there's not another lockdown and other cases.
Very good. Well, sort of moving a bit wider, to sort of the overall sort of, if you like, ramping up portfolio, which is kind of, in a way bringing up the rear. I mean, Bali will lead, with the growth and profitability and so on and the recovery. But, the ramping up hospitals, I mean, how many of them now are sort of close at profitability or close to profitability? And at what point do you see, that whole ramping up portfolio becoming profitable?
Well, I think now, I mean, out of the 17 we identify as loss-making, 12 is now EBITDA positive. Yeah. Certainly, we do believe, again, what we've always looked at is that, look, the target is within 2 to 3 years. I mean, these hospitals, should be EBITDA positive. I think what is good to see is that some of the recent hospitals that we opened up is turning profitable much quicker compared to previously. So Ambon, which we opened about 2 years ago, is already EBITDA positive, and I think that aspect of it is good. Yeah, and we do believe that this trajectory will certainly continue. And I think we've also been a bit more disciplined in our new hospital opening. Yeah, making sure that the robust business case there, that we do have a clear path to profitability, is also some of the attention that we'll be giving to.
Right. Okay. Well, that yeah, that's very interesting, and obviously the fact that you've managed to the move towards profitability, in what is pretty much an unprecedented times is a pretty impressive thing. So yeah, to talk a little bit on the cost side of things, because obviously that's been another aspect which has been a big focus in terms of cost of procurement and sort of material cost reduction program, which I think you've talked about. We talked about early on, saving 100 billion rupiah. How is that manifesting itself, if you like, in terms of the operational side of things?
I think it's working quite well. If you look at our EBITDA margins, it certainly has improved by over 4 to 5% over the last 2 to 3 years. So there are a few things we're doing on that. On material costs, for example, we used to have over 6,000 SKU. We've cut it down to less than half now, in order to be able to consolidate some of our purchasing power, to have a better negotiation with the vendors. We now negotiate pricing centrally as opposed to the hospitals all buying individually. So that has certainly helped, and we do believe that will continue to give us advantages and improvements in our material cost savings going forward. We've also have a project on shrinkages now, whereby we do look at making sure that we manage expired drugs carefully, that they don't go expire unnecessarily. And as I mentioned before, that making sure that the consumables are properly charged to patients. So those are helping to improve material costs as well. We now also have a inventory management project to reduce the number of the DOI, to improve working capital management. In the past, there's no proper processes and system to manage the min-max level of inventory. We now try to optimize inventory level there as well. Along with that, there's various OPEX initiative. I mentioned earlier on the energy efficiencies, how to optimize, for example, basic things like security. How to reduce the number of access points or put in CCTV cameras so that we don't need to have as many security personnel patrolling the hospitals. Those are some of the initiatives that we've been looking at in order to look at constantly how to improve the efficiency of our businesses.
Right, and just out of interest, the number of doctors and number of nurses, does that remain relatively stable throughout?
I would say so. Look, we basically got a lot of temporary nurses during COVID era because there's a sudden spike in demand for those. But those are generally 6-month contract, so allows us the flexibility of when COVID obviously recedes, we do not need to renew that contract anymore. But other than that, the core team, doctors and nurses, we've always We have a targeted team and program to look at recruiting doctors, specialists, especially who are obviously well known in the specialty area. When we want to build a new specialty area, to be honest, the key focus is not on equipment. The key focus is on doctors, right? Can you get the best doctor you can within that regions in that specialty area? Unless the team can convince us that they can, then we don't necessarily approve the initiative because the doctors is really the key driver here.
Right. Yes, because I'm always interested. I mean, I've had the experience of it myself, is that doctors, get rated. So people sort of look online and they'll see a doctor's rating and reviews and all that kind of stuff, which is interesting. I guess you might find that in other countries, but I think, in Indonesia, is social media important in terms of sort of?
Oh, absolutely. Social media is very important. I mean, we keep a very tight view on our Google ratings, our social media comments, and we really believe that it is important. I mean, for people to also share their stories. I mean, social media is important because it really reflects the true voice of the customers. Yeah. Which another key initiative that I think we should touch on is that we have embarked on a patient experience program since about 2.5 years ago, to have a dedicated team in looking at how to improve our patient experience. So they map out the patient journey from when a patient is seeking for information up to the stage where they are in the hospitals, up to the stage where they are discharged. I mean, what are the various touch points and how do we improve the engagements and experience that the patients get? Look, obviously, we are not there yet, I must say, but having constantly infused the cultures within our team. For example, we now recently launched a program called a One Patient a Day program. The idea is that each of our personnel should aim to delight one patient a day. Yeah. Across all our network, find some way to find one patient that you can basically delight for that day. So these are the different initiatives that we're really trying to push out, and also obviously trying to improve the applications, the queuing time to be able to have queue numbers, how to improve doctors on time performances. It's always difficult. And we now also have an online feedback form that the patients can right away after they discharge, they can provide instant feedback even before they discharge. Sorry, even when they are in the hospitals, they can instantly provide feedback if they have concerns, if they have complaints, and this feedback have automated escalations, whereby if it's not attended to by the hospital's management, it actually gets escalated to head office, to management, to ultimately to the CEO. Right. If some of these issues and complaints does not get adequately followed up and addressed. So I think those are all very important initiatives, because in the hospital context, unfortunately, in the past, patients have been viewed as patients, as people coming in who are sick, who require services, as opposed to these are actually customers, and we need to understand their needs, we understand their concerns, and we do believe that that is a key strategy of our core growth strategy in order to differentiate. We really want to differentiate on services going forward.
Right, that's very interesting, and I mean, I guess that sort of fits with your digital strategy. Well, we're on the subject, the My Siloam app and the ability to book appointments and I guess get prescriptions and so on through the app. I mean, that's obviously becoming increasingly important.
Yes, of course. The whole idea is having a seamless experience. Both prescriptions. I mean, we coordinate with Gojek, Grab to be able to send the drugs. I mean, to your home. I mean, if you really don't want to wait for it. So yeah, more and more, I think those services will become important for our customers.
Right. And how do you interact with some of the kind of app-based healthcare apps, like say AlloDoc, or do you interact with those players within the market?
We do. I will call them our partners. We do basically coordinate with them. It is possible to book Siloam doctors, I mean, through the HelloDoc and AlloDoc as well. So we certainly do coordinate, I mean, through that basis. I probably can't say too much. There are also various initiative that we are discussing about working jointly together. If you think about it, we will never be a pure digital player, and that's not our play. I mean, we're not a startup. But I think health tech, I mean, more than the e-commerce, fintech, and other things, do require a very tight integrations with the brick and mortar backend. Yeah. Otherwise, your app can really effectively only do primary care, drugs delivery. I mean, you can't really do a blood test through an app. I mean, not yet anyway. You certainly can't do a open heart surgery through an app. That may be a few centuries away. So what we're working towards, I mean, with some of these startups, is how do we integrate our services with theirs, such that their patients also can have an end-to-end experience. You could have a primary care through an online consultations, but if there's complications to be follow up, they can then come to a Siloam hospitals for us to then treat them, and all the records could still sit within HelloDoc. So these are some of the collaborations that we have been actively discussing.
Very interesting. Yeah, I just thought I'd touch on that since we were on the whole subject of digital healthcare and so on. Moving back slightly to the sort of BPJS and JKN type patients, which obviously it's been a very high growth area, but possibly one which is slightly lower margin. But I think you've got a strategy where you've been sort of dealing with that and ensuring good treatment, but also ensuring it's more commercially viable as a business.
Yeah, look, I mean, BPJS has always been an important segment for us. I think we've always supported that, and we do believe that it is an important initiative for social and global healthcare as a whole. Currently, as I mentioned before, makes about 15% of our businesses. A lot of our new hospitals are primarily BPJS. There are a few changes coming into the BPJS, obviously, that the media has variously announced, which I think would be improvement to the BPJS going forward. I mean, one is obviously the discussion about having a single tariff. Therefore, there will not be a class 1, class 2, class 3 anymore. It will be more either class 2 or class 3 or hybrid between those two. I think that would push more people to private insurance, which is, I guess, should be that way. Yeah. It allows our services to be more tailored, more catered as well, is in terms of the BPJS segment and a private segment. There's also talks about potentially revisiting the tariff, because it really has not been adjusted for quite a number of years. So I think all those are definitely positive from our perspective. I mean, BPJS has been on the whole, EBITDA positive contributions to Siloam hospitals. So we do believe that managed right, I mean, it is a viable business. And we do believe that it will continue to be a key part of our portfolio going forward. Right.
Very interesting. No, I have visited your BPJS facility in Lippo Karawaci, which is, it was actually very impressive. Just to sort of move on, you're talking a little bit about expansion. What are the company's expansion plans in terms of new hospitals? I mean, you've talked to a new asset-light strategy, which is a new thing. I mean, because obviously you've gone through a period recently of kind of sweating existing assets, which has been very successful. But are we about to see a lot of new hospitals being opened, or is there still a very sort of a measured process to in terms of hospital expansion?
Let me answer the questions in two parts. In terms of what we've been informing the market, is that we are targeting about 1 to 2 hospitals a year. I think officially that line hasn't changed. But keep in mind that as end of Q1, I'm also sitting at 1.7 trillion of cash. Siloam has close to no debt. We have said previously that we are in a consolidation phase. I do believe that we have done various improvements to the back offices and so forth. We are going to be in a robust position to be able to potentially look at a growth phase, I mean, going forward. Yeah. So what we're trying to do now is to set up a team to do dedicated scouting of potential brownfield targets that we could potentially acquire. I think the strategy going forward is that we should do more brownfield in terms of greenfield. Greenfield obviously has a lot of risks with regard to permits, licenses, ramping up. Right? If we can be more focused on brownfield and find targets that are perhaps in a good location with a good doctor network, but maybe management could have been improved further. Those are certainly an areas that is attractive for us. And you touched on the managed services model. We certainly want to explore that further. I mean, there are investors coming to us with discussions of doing JV as well. I mean, so those are certainly areas that we're exploring. So we do believe that what we do need to improve, and I think we have done that now that we have, for example, a health information system and ERP that links all our network together, it really allows us to scale, such that each new hospitals, I mean, be it funded by us, not funded by us, but we basically just open up an additional network node, and the systems are already ready to serve them. So I would say officially our stance has not changed from what we said before, but unofficially I would say watch this space, in terms of what will be happening.
Okay, great. Well, I mean that's the lead on. We're running, quite close to time now, but we've got a few more minutes left. Just wonder what given what you've just said, is there any sort of change to your sort of capex plans for this year? Are you looking to see a bit of a step up in capex? And obviously, you're flush with cash, so I guess it can be financed through internal resources.
Yeah, certainly. I mean, we're looking at about 1 trillion of capex deployment this year. But we have recently bought back our Surabaya hospitals, I mean, from First REIT. We have purchased the Mampang hospitals that we're currently running our COVID operations out of. This will be converted to a orthopedic hospitals post-COVID. We are basically catching up on some of the equipment investments that has been deferred as a result of needing to support some of the clinical programs that the hospitals want to launch. So yeah, definitely. So this year there will be a step up in capex, but still they're all funded from internal cash. Even all of this, none of this is funded from external borrowing. So I would still say we are still fairly conservative. I mean, from that perspective, I mean, there's still a bit of unknown with COVID. I do believe once the sky clears, so to speak, we could look at doing more. Right.
Very good. And on that note, I mean, are you giving any guidance for the coming year, or is it probably a bit too early to be doing that?
I think the guidance we've been giving the market is that we expect revenue to be fairly to be fairly flat compared to the previous year. Margin may drop a little bit, about 2 or 3%. But keep in mind, last year's revenue growth was over 30%. So the fact that if we were able to hang on to that with a drop in COVID revenue of close to 20%, I think that basically, if you draw a CAGR, that is a solid CAGR for the last 3 years.
Right. Very good. And I mean, I guess the big question that everyone's addressing at the moment is that of inflation. I mean, I guess that can be passed through on pricing at the end of the day.
Yes. I mean, so far we haven't seen a significant inflationary pressures. Certainly wage inflation has not been significant yet. I mean, it's in Indonesia, so that's obviously a key part of our costs. Drugs and consumables, we have seen some increase, but not necessarily a huge spike. Again, we're not a business relying upon commodity steel and so forth. But you're right. A lot of the price increases for drugs and so forth, if it affects us, it affects everybody else. Generally, the pricings are just passed on. I mean, especially obviously with the insurance market and so forth, because in a lot of these cases, we do have a fixed markup margin. I mean, based on the buying price. So far it has not had too much of an adverse impact on us on that front.
Okay, well that's great. I mean, thank you very much indeed. A very interesting discussion. I mean, were there any closing remarks before I hand over to Sanam?
Maybe just a quick closing remark, Angus. I think you've hit all the right financial questions. We have been very big on the focus on ESG as well. Joe, our head of investor relations, has been heading up a team, and our ESG scoring has been improving, and we are now in the top 50th percentile worldwide in terms of ESG scoring, and I think that is quite an achievement. We do want to make sure that, again, look, we are a business invested in healthcare in the developing country, so the social aspect of it is very important. We've also been investing in the energy efficiency. I mean, how to improve the running costs of our hospitals as well. I mean, that is not just good for margin, but I think as ESG initiative, that is also important. We have, for example, 2 clinics in Papua that really is in the middle of nowhere. You can't get there easily unless you get a plane there, and these people have no ready access to healthcare. We have a lot of hospitals that are in the remote regions. A finance person would say, why don't you open in the populated area? But I think we also have this balancing with our ESG aspect as well, is that we do want Indonesians to be able to get access to quality healthcare, and not just in major metropolitan area, but really in the smaller second tier, third tier cities and towns as well. So that has been driving a lot of our thinking and strategy. I do believe that for somebody investing in Siloam, I do hope that the thinking is not just on the returns. Whilst that is important, I do believe that this idea of the fact that we are a company that actively invests in the social goods of Indonesia is a very important investment thesis as well.
Yeah, no, I think it's extremely important, and I mean, I actually also an increasing focus for investors. So important from both perspectives. Okay, well, on that note, hand back to Sanam, and thank you again very much, Daniel, and we hope to see you soon.
Thank you, Angus.
Thank you, Angus, for some very interesting questions. Also, big thanks to Daniel for detailed insight into Siloam Hospitals, the challenges in the healthcare sector, and opportunity for Siloam. I would also like to thank our attendees who joined the session live. With this, I would like to wrap up this week's corporate webinar. Thank you again and have a great week ahead.
Thank you, Sana. Thank you, Angus.